Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone. November 16th. Hope you guys got some great upcoming plans. We got Thanksgiving coming next week, so perhaps maybe a lot of you guys are going to take the next week off and head out of town. Have safe travels if that is the case. We got a couple of light reports on the economic calendar today, and that is the capacity utilization for the month of October. So 78, we had a 78.5%. Forecast supposed to dip a little bit further down to 78.2. It had a slight dip, but not much, 78.4, so pretty close to almost being unchanged. And then last but not least, we had the industrial production for the month of October. So September we had a 0.2% increase in industrial production. Forecast was supposed to keep that same momentum at 0.2%, but it had slowed down a little bit, coming in at 0.1% increase for industrial production. Now, on the headline news, the stock market is mixed. The S&P 500 and Nasdaq are both in negative territory, whereas right now the Dow is up a little bit. A lot of it is being taken care from the Nvidia, at least the technology sector, in there. And then we got, of course, the eyes on the drama going on over in the Brexit, regards to there's a lot of uncertainty about the status of Theresa May. She's not very popular right now, and they're not in favor of her proposal. A lot of people are not in favor of her proposal for the Brexit being pulled away from the EU, and so there's a lot of uncertainty there. We got a lot of things going on right now, and this is all kind of little parts of the puzzle. So the big concern right now is concern over a possible recession going on. There's the Germany, Japan all came in with contraction in the third quarter in their economies. So we're seeing that on a global level. We've heard the Fed chairman coming out the other day, basically stating that kind of the same things as the sentiment of the investors. Kind of, they're saying the same fears. Is that on a global level, things are kind of slowing down a bit. The U.S. economy so far is doing okay, but when you see a bellwether like Nvidia come in missing revenues and stuff like that, then that creates a little bit of concern that maybe things are slowing down a little bit. So we might be kind of heading into what they call a bear market for stock market. So as a result, a lot of this is the right now the mortgage-backed securities are kind of following suit. So it's kind of following the stock's lead, and of course eyes are also on U.S. and China trade pact. If we can get some type of agreement going on there, or are we going to escalate further by adding more tariffs to another round of tariffs. So again, these are all concerns that the investors are facing right now. So they're instead of really looking at good news, they're looking at the bad news, and it will get exacerbated because those concerns are only deepening more. As basically, a recession is basically on the loom. We go through these market cycles, and this is just another one. We haven't had one in a while, primarily because we've been trying to grow and stimulate the economy, and we haven't had one in a little while. So it's we're kind of more or less due. So let's go ahead, jump ahead, see how bonds are faring. As we mentioned, that was stocks were mixed right now, and it's doing well. We're up about 17 basis points from where we left off yesterday, which is obviously good news for us. We're still above this 25-day moving average, which has been a pretty tough, as you can see. The last time we were above the 17-day average, it was back August, September timeframe, and since then we've been down for the last several months below that, and now this could hopefully become a floor of support for us. Which will be, give us a little bit more boost, which could also help improve interest rates for a period here. Yields are getting pushed down further. It's right now it's down, pushing below the 50-day moving average. It did try it yesterday, so you can see we're at about the same level. We're pulling back slightly. We're about 3.08. We'll have to wait and see if it if it could break below it or if it's going to stay above it. If it could break below it, that will help out mortgage-backed securities and interest rates. But right now, going into the weekend, at least we know we got a little improvement of our interest rates, and potentially we could see continued improvement in here. All right, you guys have a great weekend, and hopefully we'll see some of you guys on Monday if you haven't gone on vacation. But if you guys do, I hope you guys have a happy Thanksgiving. Have a great, safe week with your families. And otherwise, those who are still in town, I look forward to see you guys on Monday. Again, thanks for watching. We'll see you guys on Monday. Bye-bye.